Hey, tourpreneurs, it's Mitch Bach, and just a quick note before we begin today's episode. Tourpreneur is currently sponsored by Google. We're thankful for their support of our community, and we are offering with them a completely free course helping you unlock the power and potential of Google's Things to Do program, which is specifically helping tour operators add their tours to Google in new ways that gives you new exposure and more direct bookings. To learn more, go to tourpreneur.com/Google. And as always, show notes, more resources, links to our newsletter, our business coaching community, and so much more are available on tourpreneur.com. Now to the episode.
Hello, Tourpreneur community. Today I welcome Martin Alcock. Martin is from the Travel Trade Consultancy, which helps travel companies and tour operators solve regulation, finance issues, and strategy problems. He's been running this for over a decade. Website, if you want to look him up, traveltradeconsultancy.co.uk. So the TTC helps operators and tour operators launch new businesses, launch new products, new markets, obtain licenses that can be often difficult to get, things like ATOL, Apter, IATA. These are UK, some of them European, UK type licenses. He also gets involved in negotiating approval for major corporate changes within IATA. If you're in these licenses and you want to change your organisation, you have to negotiate the changes. Complying with travel regulations, the European travel regulations that still impact on UK operators. We have to comply with them. He also gets involved in arranging financial security. This is important because during COVID, we all seen what happened with many operators not having financial security in place, bonding in place, various trust accounts to be able to pay back the customers. So that's super important. So we'll get into that. And he also gets involved in helping operators with banking and merchant providers. So your credit card providers and the ins and outs of the myriad of different providers that we have these days. Some good, some bad, some pooling at short notice. Who is the merchant of record? All of these difficult questions. And we may even get in for UK operators a little bit on TOMS and on VAT, because that is always one that confuses the hell out of me.
Did you know Tourpreneur also has a Facebook community of over 7,000 tour operators? If you are not a member, then search for Tourpreneur on Facebook and join a thriving community of tour operators and other travel professionals, all of whom learn from each other as well as from Chris, Mitch, Pete, and many other industry experts. By becoming a member, you will be notified first of any events, meetups, and exclusive content. Join the Tourpreneur community today. Facebook.com/group/Tourpreneur.
Welcome, Martin. Welcome to Tourpreneur.
Thanks, Peter. That was a great intro. Appreciate it. Great to be
All
here.
of this stuff is the sort of stuff that used to make, when I was operating, used to make my eyes glaze over. But it is important. It needs done. And the whole thing we run this community for is to make operators more profitable. And the hard reality is, if you ignore some of this stuff, you will not be a profitable operator. So some of this stuff is really, really important to our objective to make operators more profitable. So let's jump straight in. Can you share some of your experiences with helping tour operators or supporting tour operators and their experiences, some of the challenges they face when they're setting up or launching new products, maybe something around funding, and if operators want to scale, they often struggle with extra funding. We're not in the VC world, we're in normal funding world. So just some of your experiences over the last decade with helping operators around that.
Yeah, for sure. And look, all of that stuff that you covered off in the introduction, none of that is why people get into this business, right? They definitely don't wake up and decide that they want to kind of deal with these kind of regulatory complexities. And so I suppose at the heart of what we're trying to do is to simplify the complex and to help people through all of that stuff. So often, go to the kind of typical client project that we pick up. It tends to be someone has a real passion for a particular service or product, and they start to look at how can they build a business and build a lifestyle around that. they very quickly come up against some of those issues around, in our world, it's often the regulation, the licensing, and what does the law say you can and can't do. Very quickly after that, it's the funding. The working capital challenges for a startup business in this sort of space are really challenging because there's a lot of costs, and when you're subscale, you usually have to pay a lot of supply in advance of generating the profits and realizing the profits. So it can be usually that's the starting point we get asked is, how can I make sure I stay the right side of the law? What can I do? What can't I do? And what badges or licenses might I need? And then very quickly afterwards, can you help us to raise some funding to basically fund that? And often that will be from a variety of sources that will help them to work through. But there's all that building financial models, trying to help them to come up with realistic assumptions on what they're going to need, what the kind of funding gap is, and then we start to look at sources. So hopefully that gives you like a little bit of a flavour for where we tend to get involved.
Yep, sure. So let's just pick one of them. One of the licenses, Apter. That's a fairly common one in the UK. How would you help an operator decide, not go and obtain Apter, decide if they actually need Apter? And then told you before we recorded, I put my hands up. I never ever joined Apter all the years I was operating. So how would you help an operator decide if they need to be the Apter, and then if they are, how would you go about helping them join?
Well, I think with any of these things, the starting question is probably, do you need it, and what are the benefits? Now, some of them are legal obligations, depending on which country you're established in. It might be a legal obligation to have a particular license. Atoll is a great example. It's not a choice. You've got to have it if you sell that kind of flight inclusive product. Apter is more a trade association, although it does act in some ways like a regulator. So I guess the starting point is it a choice, or must you have something? If you have to have something, there are multiple options out there, and they all have pros and cons. Apter is a great example of, not only does it do the consumer protection piece, but it's doing government lobbying, it's running training courses, it's providing model terms and conditions. Now, you might be an operator who says, I want all of that, I want to be part of that community, and I'm willing to pay the price for all of those ancillaries. Or you might not. You might think, I want the bare minimum compliance product that's out there, and I don't care about all that government lobbying stuff that they do, or I don't care about the training courses they put on. I just want to kind of tick that box. In which case, Apter probably isn't right for you, and it may be that might be a more expensive way of getting to that same outcome. So the starting point is probably trying to work through some of those different sort of decision trees. Again, a great example in the UK market, it often comes down to your client base. I was with a business this morning, for example, who says, well, we were an Apter member and we came out of it. We ran some extensive A/B testing on booking conversions with and without the logo. How does the Apter logo compare with, say, Trustpilot, or just a no logo at all? And they came to the conclusion that actually our customer base doesn't necessarily value it. But I have other clients who tell me, we're selling to a particular age group or demographic where if we removed that logo, bookings would dry up. So I think there's an element of what's the cohort that you're selling to, and what does the sort of data tell us about whether people do or don't place sort of reliance in that sort of area.
So the kind of lesson I got there is, when we're ranting on to the community about this all the time. So if you listen to that, folks, A/B testing, split testing, do not run with opinion. Do not run with what you've been told. Actually test. And that was a great example of physically testing. Does this authority's logo make a difference to my bookings or not? And for some it is, and for some it's not. Therefore, that demonstrates you can't take anyone's word for it. You have to actually go out there and test to actually get the...
Yes. Oh, the guys I was talking to this morning are, not a single change will be made to the website, either to be something to be added or something to be subtracted, without full testing. And, the data is what they follow before they make any of those changes. So I think if you can do that, and it's relatively simple to do these days, of course, I think if you can, it's definitely something worth doing.
So, package travel regulations for UK operators. We were in Europe. Now we are not in Europe. We came under European package travel regulations, which are available for everybody to download off the internet, but they are confusing. Then that thing called Brexit came along, and I'm not clear where we stand at the moment in the UK for travel package regulations. Have we adopted what was in Europe? Are we still adhering to it? Have we come up with new stuff or sell? It's all a bit...
Yeah, so the package travel directive was the European piece of legislation that covered all of the countries across Europe, and obviously the UK was part of that European Union. But what we did was transpose the directive into UK legislation on the UK statute book. So the package travel regulations, it's actually the package travel and linked travel regulations to give it its full name, that exists in UK law. So when we left Europe and went through the transition arrangement, the transition period, that law still exists, and that's what's applying today. There is talk of making some changes to that. Various consultation processes going on, but as things stand, nothing has actually changed in the regulatory framework.
Could you explain, because we've got a lot of new operators, a lot of start-up, even been maybe going a few years, but they're still in that start-up phase. Could you explain what's included in the regulations package travel that would make them legally liable to adhere to it? What are they doing that would make them drop into these regulations? Because a lot of our community will not drop into these regulations, but other ones will.
Yes. And I mean, absolutely, that's the right place to start, isn't it? Because it captures certain types or combinations of arrangements. And probably worth just sort of standing back and saying, at its heart, this is a consumer protection piece of legislation. So it's firstly protecting consumers' monies. So when people have paid in advance for something, and the main use case is that the family holiday. People pay a long time in advance for this trip. It's a big ticket item. If something goes wrong after you've paid it, the law says there should be some kind of way of compensating the person who's paid. But the other really important aspects, it's not just about financial liability. It's about the health and safety, the liability from a health and safety perspective of the trip. So if you're deemed to have sold a package, then you as the package organizer are liable for everything that goes on that trip. And that covers not only the financial aspect of failure of an individual component of that, it does cover slips and trips. It covers issues they might have while they're on your trip if they have an accident or something, that you can be liable. So really important to understand where the boundaries of that kick in. Effectively, it all hinges on this definition of a package. So there's a lengthy piece of legislation that explains what it is, but fundamentally, it's where you combine two or more of transport, accommodation, vehicle hire, and other ancillary service. And other, to form part of a package, has to be either material because of its financial aspect, so is it more than 25% of the overall thing you've put together, or material because it was the main purpose of it was a material aspect of the arrangements that you were selling and advertising it on. So a great example is if you're selling, event sports tickets and a flight, that would be a package if the main purpose of that trip was the sports ticket, if you see what I mean. If it was a relatively cheap add-on like a transfer or something like that, then that wouldn't be enough to create a package. So it's got to be beyond. Sorry, Peter.
I'm just thinking back to my days handling this stuff. Is there something about 24 hours in there as well? It has to be overnight.
There is. It's got to be greater than 24 hours or involve an overnight stay. So yeah, day trips with multi-event transport and some sort of guided tour, for example. If it was all within that one day, then that wouldn't be captured under the regulations. But the minute you start going beyond a day and having overnight stays and things, then you've got to be really careful, and it most likely would be caught.
Yeah. The reason I'm bringing that up is we do a lot of training with the community. We take day operators, which about 60% of our community is day operators, and we encourage them to become multi-day operators. Basically, we're encouraging them to sell packages. Why are we doing that? Because we know the numbers, and if you're going to be a highly profitable day operator, you're going to have to sell a lot of people, whereas you can be a highly profitable operator on multi-day, selling a lot less people, less clients, more profit. So we encourage a lot of our day operators to experiment with multi-day product and packaging, but we don't tell them suddenly to go from 1 day to 14 days heading to climb Kilimanjaro. We say, whatever destination you're in, instead of selling a day event, sell a 2-day event, sell a 3-day event. So start small and build up until you get a feel for multi-day and multi-day clients. However, as Mark has just explained, the minute that you do that, and certainly in the UK, you fall under other regulation the minute you go over 24 hours and it becomes an overnight stay.
Yes. So you definitely shouldn't walk into that unaware. You do need to be aware of it. I wouldn't try to necessarily discourage people from doing that, though. I mean, it's funny, we have a lot of conversations as a business. We have a lot of conversations with clients who are desperately trying to kind of contort their business into some sort of strange way of selling or offering products to try to avoid some of these regulations. And actually, you can end up shooting yourself in the foot to some extent, because there is, generally speaking, better margin to be made by kind of bundling different services together and going with a slightly kind of longer term product. So there, I guess it's being aware of what your responsibilities are, and then making sure you have the necessary business protections in place to cover your own liability. You know, for example, there's a very specific type of professional indemnity insurance that you need as a tour operator that needs to cover off all of that liability for slips and trips on one of your tours. You can't just go and buy a professional indemnity insurance policy off the internet. That might also apply to, I don't know, business consultants and accountants. It's got to be a travel policy, but you can, by using that or by joining some of these organizations that we talked about at the start, you can protect yourself from the risks that come with that, but you've got to do it. You've got to be aware of those risks before you start doing that, definitely.
Could you give us some insights on how operators go about? We had this with COVID. We've had probably the best example we're ever going to have. I'll say that in the wrong way. Best example. COVID was not a great example, but it caused financial security, bonding, trust accounts, ring fences, insurance, all of these things came to light during the COVID pandemic, because we found out what operators had them, what operators didn't have them, which ones of these worked well, because they didn't all work well, even though operators had them. Some of them didn't. But it certainly put it in the spotlight, and it was in the background before. Certainly the consumer hadn't really paid attention to it, and a lot of operators hadn't paid the correct attention to it, but now it was suddenly in the spotlight, and it was on the BBC News on a regular basis, and for the bigger scaled operators that couldn't pay back the refunds in an acceptable time because they didn't have financial security. So could you just explain some of the options on financial security?
Yeah, and look, that was just a crazy period where everything came under the microscope like it never had before. And it's interesting because we often have this debate about whether consumers care or whether they are aware. And I think almost always the answer is they aren't. They're usually buying on other reasons like, price or quality of the trip. Then they're not buying on the regulation side until there's an incident, until there's an issue. Then it becomes...
Now, care when it goes wrong.
Exactly. And there's a question mark over what we used to talk about when you'd see a big tour operator failure, for example. Thomas Cook fails, it's all over the news. Suddenly everyone wants to know about atoll protection, or whatever country you might be in, what is my financial protection if this goes wrong? 3 or 4 months later, that's kind of slipped from the memory and away you go again. So broadly speaking, if you are finding yourself in a position where you're selling packages and you've got an obligation to protect the monies that you're collecting, there are a range of options how you go about doing that. There's an insurance option, so per passenger insurance policy that in the event that your travel company fails, and remember this is what you're covering. It's not that the trip doesn't go ahead because there's been an ash cloud or something like that. It's protection for your business's insolvency. That's what have to do.
Is that pay as you go per passenger?
Yeah. So generally, the way it would work is the insurance would be priced. So the insurance would do a credit assessment of your business, but they would price the insurance usually around sort of 1% to 2% of the holiday price or the trip price. So and you would pay that. You normally would pay that on actual sales. Usually they'll ask for like an upfront deposit premium, but you would be paying that on actual sales rather than on a kind of a budget or a projection of how many you think you're going to sell. And so in the event of your business's insolvency, those consumers can then claim on that insurance policy and get their money back. So that's one option. We call it financial failure insurance.
So that for a small multi-day operator who's starting to scale up, and obviously cash flow is probably the major issue for a small multi-day scaling up, that seems quite attractive if it's pay as you go.
Yeah, I wouldn't say it's necessarily the cheapest. So if you get to the end of a financial year and look back, you might say, actually, we've ended up spending more than some of these other options. But what it does is give you absolute flexibility, because as a small operator where, I don't know, maybe your budgeting is relatively unsophisticated and you can't say with any kind of degree of confidence what projections are going to look like, some of the other methods we're going to talk about do require you to do that and set bonding levels, for example, based on a set of projections. If you get that wrong, you could find that you've sunk a lot of cost into something that you didn't need. Financial failure insurance might be more expensive on a per passenger basis, but it's flexible. It's like a variable cost. And so a lot of operators like it because they can just bake it into their gross margin, and it becomes a variable cost rather than a fixed cost.
And trust accounts? They were been about since I was a kid.
Yeah, so just very quickly we'll touch on, so financial failure insurance is one type. Bonding is another distinct type, and it can be used as insurance. Actually, you can also do that through a bank. The way that works is it's effectively a guarantee for a fixed amount written by an institution, either your bank or your insurer. It has to be provided to somebody like Apter, so what they call an approved body has to hold that bond. And then again, if your business goes insolvent, Apter or whoever the body would be would cash in that bond, and they would use that money to repatriate and to refund. So it can be insurance backed, but it's distinct from financial failure insurance. The third option is trust accounts, and that is effectively where the money that you've collected from consumers sits in an entirely separate, segregated, ring-fenced bank account with an independent person overseeing that money and effectively releasing it back to you once you've delivered on those holidays.
And is it still the case, again, I'm going by years, that trust account, can be a solicitor, lawyer, sits as the independent person and then releases it once the trip's over?
Yeah, that's right. There's not a huge amount of detail set out in the regulations as to who can be that trust provider, but effectively it's got to be somebody independent, it's got to be somebody competent, and so usually that would fall into a lawyer or an accountant. Where it's someone like the Civil Aviation Authority, who run the ATOL scheme here in the UK, they allow trust accounts, but they have a roster of preferred trust providers, and so if you want to meet your obligations under the ATOL scheme using a trust, you must use one of these kind of listed trust account providers. So not everybody has that. And so if you're not ATOL and you just want a trust, actually you could have your accountant to do the work. And there are some stipulations as to how the trust has to work, but it's a bit more flexible as to who is the trustee.
And where is the market at the moment between them three options? We have insurance, basically pay-as-you-go insurance, which I know would be appealing to many small operators. We have bonding, where there's you're putting money away via another insurance policy.
Yes.
There. And then you have trust accounts where the money from that trip is sitting in the trust account until where's the market on this? How's the market split up? Is one of them growing fast compared with the other?
Yeah, I think trust accounts have grown really out of necessity over the last few years, principally because the insurance market, as you will have seen across all types of insurance all around the world, I think capacity dried up, partly because of COVID. I would actually say that the big Thomas Cook failure probably took out more capacity initially. You know, there was lots of insurers just pulled out of anything related to travel after that failure. But then COVID hit, and I think more insurers disappeared as well. So trust accounts became a sort of necessity, and lots of people moved to that. It's very capital intensive, as you'd expect. It's really difficult to scale up a business. It's difficult to exist in a trust account, but to scale is just an even sort of, a degree even harder. We've probably hit a bit of an inflection point over the last few months in that we are, in the UK at least, starting to see more insurers coming back into the market, more capacity, more willingness to underwrite bigger limits. And so the people who were maybe pushed into trust accounts because they didn't have any other option are now starting to look at that and say, well, actually, can we move back again? And we're starting to see both financial failure insurance and the bonding route become more accessible, which is helpful. Frees up a bit more capital, and that you can use that for other purposes in your business.
Let's move on and talk a bit about preparing budgets. As you mentioned in your intro, that like most people get into this game, they didn't go to university to study to become a tour operator, and the vast majority of tour operators have had a different career before becoming a tour operator, or they have been a guide for many tour operators and suddenly got to mid-20s or 30s and decided to become a tour operator. So people tend to fall into this. They don't necessarily have a financial background or an accounting background or in a budgeting background, understanding margin. It's certainly preparing budgets going forward. So just let's talk a bit about how you help operators detailed budgets, business plans, because these are essential if you're going to start using some of these things we've been talking about, because the people who issue the badges and the authorities and the bonding and all the rest of it want to see your numbers, want to see your budget.
Yeah, and look, it's not only is there a third parties looking at this stuff, and any one third party could be anyone from a regulator to a lender to a potential investor. But I think it's really important to have the discipline to use them as tools in your business, because, you know, it's an old adage, isn't it? But it's cash flow that kills businesses. And you could have a very profitable, very desirable product, but if you don't pay attention to that working capital cycle, you can easily find that you run out of money because of the you know, the way you're having to effectively pay for a lot of costs in advance. You know, you can easily find that you grow too rapidly. You know, it's a nice problem to have, but you can easily grow too rapidly and run out of it. So I think there's a slight kind of paradox, isn't there, that any financial model is kind of out of date the minute you produce it. And I think often you'll get people who'll say, well, I don't see the point because no one can predict the future. What's the point in even spending the time doing it? But I would say that they're important tools, because you need to know, you really need to understand what the levers are you can pull. So you can come up with a set of assumptions and you can say, I think we're going to trade like this, which is going to generate this many sales. It's going to generate this much cash inflow. But if it doesn't, if I'm 10% down, or if that market goes off sale, you need to be able to flex that budget and see, well, what would be the impact and could I survive that? And if I had to lose that amount of income in that particular month, well, what are my options? Do I have some revolving credit facility? Do I have another investor, or could I put some money back into the business? So I think it's more like a sort of living, breathing tool of your business, rather than just being I've done a model, there's a budget, stick it on a shelf and move on. It's something that you built in the right way can become something that drives decision making and gives you that sort of peace of mind.
Yeah, we do a bit of training on scenario planning for operators.
Yeah.
And I keep using this bloody example, but it was the biggest one we've ever seen. COVID, and was hopefully the worst scenario plan that you could come up with for operators. But we're in the travel industry, and I wouldn't like to ring off the disasters I encouraged in my time. It happens all the time. And if you're multi-day and outbound and all operating in different regions, and scenario planning, asking the question, what if this goes wrong, is hugely beneficial to your business, because in travel, some of these things will happen. It's not a case, oh, they might happen. They will happen. It's in the post. It's only a matter of time. And we found out again during COVID that the companies that had great planning and financial models certainly did better. They lasted longer. They maybe got out the other side. And the ones that were really weak on financial models didn't do well, because the businesses clapped pretty early because they hadn't done the scenario planning on the financial model.
Yes. And so for me, the building the model, I mean, they can be ridiculously complex. Peter, I'm sure you've seen complex models in your time. They can run to hundreds of sheets. They can run to millions of assumptions. But I suppose at a basic level, we like to build the model based on an ability to flex what's in your control. So, for example, if you're a marketing-led business, I don't know if you're spending money on paid ads, for example, starting to put some assumptions in around conversion rates. So almost at every step of the funnel. So what do I have to spend to generate, 1,000 clicks onto my site? And of those 1,000, I think I'm going to convert this many into the next stage on the journey. Ultimately, at each stage, what is the metric that drops out of ultimately a single booking? Because that allows you again to track actuals over time to see, well, my assumptions were that for every pound spent on marketing, it was going to generate this volume of interest, this volume of clicks. Well, exactly where is it in the funnel that isn't functioning, and what do I need to correct? You can very easily fixate on the wrong problem without this level of granularity. You know, a great example is if you know the sales aren't rolling in and you go, right, well, we need to spend more money on marketing, but actually with the data you could quickly find, well, I'm getting plenty of attention, plenty of people, but the friction is, I don't know, the shopping cart where people can't check out. Well, actually throwing more and more bookings into the top of the funnel is never going to solve that problem, and actually all you're doing is throwing money away. So without that, I think without the modeling of assumptions and then comparing back to well, what are the actual results telling me? I think it should be a really important part of the regular business checking in.
Changing the subject and jumping onto one of my non-favourites, because it always confused me in the days. Tom's VAT. This is for UK listeners. We have a distinct VAT system where you add a product that's 20% onto the top of your tours, and then it goes through a thing called Tom's, which is a tour operator's margin scheme. Where is that? Is it still in existence? Is it still relevant to tour operators? I did hear it had lots of changes in the last few years.
Yeah, so look, this is definitely not my core area of expertise, but remember that what Tom's was about was simplifying the position across Europe. So, you're selling in one country, but you're buying supply in lots of other countries, rather than having to register in every country in Europe. This was about just paying VAT on the margin that you make in the country that you're established. So the UK's come out of Europe. So at the moment, it's still UK tour operators are still applying Tom's, but because as a UK business, all outbound travel is now zero rated. Effectively, you could still run the calculation, but effectively it means there is no Tom's to pay on your margin for outbound travel. And that's my main sort of area is outbound. I guess if you're organising tours that are all UK based, then you would still have to account for it, and that would still be standard rated. The challenge that we've got though is because we are in this slightly, there's this sort of temporary no man's land position where if you're selling outbound tours from the UK, you no longer have to pay VAT on the margin because it's zero rated. But what we're starting to see is, the various regimes across Europe saying, well, there's a tax gap here somewhere because no tax is being paid at all. And actually, Croatia is one example of a country that has said, well, if you're selling to people, taking people to Croatia, you do have to register and account for VAT in Croatia. There was strong hints that Germany would also go down this same route. They seem to have pulled back for a second. But the sort of worst case scenario is that every member state makes, the whole reason Tom's was put in place in the first instance was to avoid that need to go and register in every member state. That's the danger, as we end up in that sort of place where it becomes an administrative nightmare. So at the moment, it's in a bit of a temporary hiatus, and I think Croatia do make you do it. Everyone else seems to be kind of holding fire. There is talk again of some kind of consultation process to look at Tom's again. Not sure when that will be exactly.
Yeah, again, that obviously falls into your scenario planning, because I would class that as high risk.
Yes.
If you end up as kind of small, medium-sized operator start having to register for VAT in every year or every country you run outbound tours to, that's a nightmare. That's a business killing nightmare.
And what we've told people is, well, firstly, you need to understand where you're sending people and at least have the data that says, well, if, I don't know, I'm exposed to Germany, if I sell a lot of product to Germany, if Germany did go down that route and I did have to start registering and paying VAT in Germany, what would the impact of that be? Because that's a kind of, you can quantify that, right? You can look at your sales and look at the VAT rate.
Top of my head, I'm not an expert in this by any means, top of my head, but if I'm in that situation and that started to roll out across Europe, surely my solution is always going to be deregistered my business in UK and re-registered my business in the EU, a country, and then work over the EU regulations.
I think that's what we see a lot of people do, is that there are these passporting rights in Europe, and so if that became a material problem, I think you need to quantify it to say, well, is it material? And if everything you do, bar a handful of sales, falls outside of that, then you wouldn't need to go down that road. But those passporting rights do exist in Europe, so we see a lot of people set up a subsidiary in Ireland or in Netherlands. Sweden actually is quite a popular place to set up, and by having that sort of branch or legal entity in Europe, you can then benefit from the passporting rights everywhere else.
Quick question on lawyers, legal advice. Everybody's favourite people. They charge a lot and we never understand what they're talking about. Sorry to any lawyers listening. Do small travel businesses scaling up who are getting involved in all of these regulations that we've talked about and different badges, etc., do they need a lawyer, or can they get by without a lawyer, but do they need a dedicated travel expert lawyer?
I think below a certain scale, you probably you need a decent set of terms and conditions. And frankly, what most people do as startups is look at their modeling on and copy and paste exactly. I mentioned at the start, Apter, if you're a member of an organization like Apter, they have a whole suite of documents, standard off-the-shelf documents that are customizable. Great place to start because they're constantly having lawyers look at them and refresh them when there is like a legislative change that needs to be incorporated. So we would tend to say, as a startup, you definitely need terms and conditions. You need to have thought about the aspects of liability, all that stuff we talked about on the package travel regulations, for example. You need to make sure that you're mirroring your legal obligations in those terms and conditions. It's not really until you get above a certain scale, and again, it's pluck a number out of thin air, but really it's until you got traction, until you're kind of turnover above $1 million. I would say that's really when you start to get a lawyer involved in. And that's where they earn their crust, right? Because that's where there's much bigger liability if you get these things wrong. So they will then make a much more bespoke set of terms and conditions. And I think that also applies to supplier contracts, right? Like when you're starting off, you don't have the scale to, if you want to sell the supply of a particular provider and bundle that together, whether that be a flight or a hotel or whatever. When you're subscale, you don't really have any negotiating power. You're more or less given the terms, and you either comply with them or you don't. Once you get to a bit beyond that and you do start having some purchasing power, it is then entirely possible for you to push back on terms. Great example, every set of terms and conditions will say what geographic jurisdiction we would go to court if there was a dispute. And you always want that to be England and Wales. If you're an English, a British established company, you always want that on your kind of home pitch. Now, if you're selling, I don't know, a Spanish hotel, they are always going to want it in their territory. So until you've got some purchasing power, you've got no chance of changing that. But after a while, that's where a lawyer can really help you, as you can start to make some changes to those standardized terms and make them a little bit more kind of buyer-friendly, if you like.
Yep. No, makes sense. Again, switching subject, one of my bugbears, because it comes up a lot in the community and it's not understood well. Many of our operators just have never heard of it. So the merchant of record. Who is the merchant of record when you sign up to a payment gateway as a tour operator? What's happened over the last 7-8 years when we've got more and more technology platforms come into the business, and these are SaaS platforms that have scaled rapidly, lots of them well-funded, signing up, and in some cases, thousands of operators, other cases, hundreds of operators. Makes it very easy for a new business, a small business, just to sign up with a technology platform to run the operations of the business, help with the content management and sell it, but they also come in with we'll handle your payments as well. And that's compelling if you're small and struggling to get merchant services, because it can be hard to get merchant services, particularly on outbound multi-day or any multi-day. But that comes with legal liability. Who is the merchant of record? So could you just discuss a bit about the merchant of record?
Yeah, and it's a grey area, isn't it? But if you go back to that stuff that we talked about at the start around if what you're selling is a package, so it's multi-day, it's multiple components like we talked about, but added together, then you do have some legal responsibility to protect that customer's money, to refund in certain circumstances. One of the COVID issues, wasn't it, was the obligation to refund within very tight timescales when you maybe weren't receiving refunds from further up the supply chain. So if you're the merchant of record, you've collected that payment directly. Firstly, that means the liability does land on you as because you're the contractual party in that contract, but you're also in control of the money. And I think that's a really important part of this, is you have got the money. You can dictate and determine when, say, refunds get paid or exactly what happens in a sort of disaster scenario. What worries me about not being merchant of record, but whilst being the package organizer, is you've got all of the risk and all of the responsibility, but you don't have control of the money. Now, you could avoid being merchant of record in a sort of agency scenario if you were acting as the agent of someone further down the supply chain and they're the one that's taking all of that legal responsibility, then it's probably okay. But my worry would be if you're the package organizer in law but you don't have control of the cash, you could very easily find yourself in a difficult place.
And one of the issues we see keep popping up with this is we have a lot of tour operators who change their technology platform. They decide to get, certainly if they're scaling up, they've started off with a technology platform that is good for when they're a small operator. They start to become a medium-sized operator, and they decide they need a different technology platform. And if they've subcontracted the merchant of record to the initial platform, they will have lots and lots of forward bookings in there. The deposits have been paid.
Yes.
So there's liability on that platform. And then they say to the platform, oh, we've scaled up now, we're leaving, or we're changing to another platform. Sorry, but yours doesn't do X, Y, Z for us anymore, and we're leaving to there. And that's where it becomes challenging, because there's liability on the first platform. The operator thinks that money is their legal liability, but it's not. It's all the responsibility of the booking is their responsibility, but the actual money is the legal liability on the platform. So that's where we've seen it starts to get a bit messy when people are not the merchant of record. And I would say, from a scaling point of view, this wasn't an option 15 years ago, 10, 15 years ago. You had to be the merchant of record.
Yes.
Because it was a pain point, and now we have lots of tech and lots of platforms willing to take that pain point away, which makes it really easy. We've seen a massive growth of operators who just sign up to the platform without realising that they have liabilities with not being the merchant of record.
And again, I mean, that's a great example because because the platform does have the liability. You know, ultimately, if the service isn't provided, the consumer who has used their card to pay the platform does have the right to charge back against the platform. So the platform does carry liability. If your business has moved on somewhere else, you can easily find that they're wanting to withhold for much longer than their normal terms. They may say, well, actually, for this liability, if your runoff of bookings is over the next 6 months, well, until that last person has returned, theoretically, we could receive a chargeback for non-delivery of service. And so, go back to that modelling point, right? Like suddenly you can find that there's a big cash flow gap there because all that money that you thought was coming to you from the merchant processor via the platform in that instance, you might find is stopped, and you're now being drip fed as and when your customers travel and come back again. That's a cash flow gap that's going to have to be filled from somewhere else. And you know, equally, the worst case scenario is the new bookings you're taking with let's say a new merchant provider where you don't have history with them. If you're subscale, you maybe can't negotiate preferential terms. You might find that you've got 30-day settlement on them as well, and so suddenly you've got a long gap to bridge. I mean, it's we do a lot of work in the transaction space. Companies being acquired, and often there'll be change of control provisions either in their licenses or in their contractual terms with either platforms or with merchant acquirers and whatnot. And it's these little unforeseen problems that creep up, that somebody suddenly says, actually, I think I've got a liability, so I'm going to shut the gates and stop money coming out. You know, that those unforeseen things can really cause problems ultimately with getting a transaction away.
So, coming to the end of this, Martin, I wonder if we could just finish off with you giving us maybe one or maybe two, just different scenarios of, you don't need to name the operators, but give us a typical operator that will come to you with the typical problems and how you would work through them problems, time scale, etc., etc. Just a couple of scenarios how you help.
Yeah, sure. So, I mean, the most common one would be in that regulatory space, you know, so it can be a very positive reason, like I'm working on one right now where a private equity fund they're in exclusivity. The private equity fund is agreeing to buy this business. It has a bunch of licenses, and so that will trigger a change of control. And so as part of that process, we're helping them to firstly cost out what we think it's going to mean in terms of new security that will have to be put in place because there's new owners, how we place that, whether it's bond, trust account, insurance, all of that stuff we talked about before. And then we help them execute the transaction. So we want to complete by the end of July. We'll just make sure that we get the regulatory approval for that. So that's kind of one typical example. And they're quite positive scenarios because they're, by and large, that's a fund willing to invest and put growth capital into a business. I suppose at the other end of the regulatory spectrum, it's people who maybe hold licenses and are in difficulty, you know, because the regulator wants to see well-funded and well-capitalized businesses. And if, because of the COVID period or for some other reason, you aren't meeting their requirements, you can easily find you're in a negotiation with them and they're trying to either take security or close down your business in some way. So we will advocate for companies and we'll help to make sure that we get the best sort of possible outcome, and we'll look at what we have as a whole toolkit rather than just one or two tools that the regulator might mention as options. We have a bunch of other things that having been done this for 10 years, we kind of know what they'll accept in terms of, parent guarantees or restrictions or, subordination of loans, all these sorts of different things that we can maybe apply. That's the kind of stuff we do in the regulatory space. I suppose outside of that, what we're seeing at the moment, and again, I talked to that, it's a bit of an inflection point at the moment, is that it does feel like the ones that have survived and come out of the other end of the kind of COVID period, and I've started to see some good numbers coming through this part of the summer, this sort of first 6 months of this year, now feels like a good time to look at, well, having just been kind of head down, get through it, now is a good time to get your head up and look a little bit at what do the next 3 to 5 years look like. And so we're starting to have these slightly more long-term strategic planning conversations with companies, which is partly building out a financial model of scenarios, partly looking at, well, what is in the next 3 to 5 years? Is it growth? Is there an exit along there? Is there some other kind of event that we need to start to plan towards? And only really by setting that plan, taking the time out of the business to work with the management team to look at all those sorts of key areas, only then can you start to put in place the detailed plan to close any gaps that you might have. So we're starting to see a lot more of that sort of activity going on now, partly because we're in slightly more positive territory and there are more options and more opportunities out there now, because we're starting to see things like new insurers coming back, new merchant acquirers coming back, customer demand back. That's driving investors, banks and lenders seem to be a bit more, have a bit more of an appetite to open their wallets. So it feels like quite a positive time, actually.
So thanks very much for that, Martin. So for all our listeners, obviously being a tour operator is the most fantastic job in the world. You're lucky to do it. But it is complex. We know it's complex. You know it's complex. And the regulatory frameworks around it is even more complex. It's certainly beyond my capability to understand them all. So if you're looking to understand this more, you need help, please just reach out to Martin at the Travel Trade Consultancy. You can find them on LinkedIn. You can find them by the website, or you can reach out via Tourpreneur myself and I'll get you in touch. So Martin, thanks very much for giving us all your expertise.
My pleasure. Really good to talk to you, Peter.